Yo, what up everybody? Welcome to another weekly review video where we break down DXY and Euro USD. We're gonna do 2 weeks this time because last week I was a bit swamped, so I missed that one. But we're gonna break down what happened in the last 2 weeks and why I was very confident that DXY would go higher. I will break down 2 trades I took this week as well, 2 winners. And there's a little trick you can use, which I will explain later in the video, why I was very confident that price should go higher on DXY, even though a lot of people were looking at a consolidation phase, which was not a consolidation phase. And they thought price would most likely draw lower. And I can understand that because we had these relative equal lows down here, right? It looked like we might go down here because we retraced back in here, right? We had that gap on the 27th of April, then price started to expand lower. We were still respecting a bearish fair value gap, right? So I know I saw a few people who wanted to look for lower, but I was very confident we would go higher. Explain that later in the video, but we'll break down what happened last week first, right? We had, let me see over here. Prior, we had this big gap here, right? And the market just dropped at the end of the monthly candle over here, and then it started to slumber a little bit. This is the point where you really need to stay patient. Hopefully you guys did that as well. And if you're unsure what direction we're going, I would always advise using market maker models, right? So I have one marked up here. We have this original consolidation, right? And price dropped and took out this sell side. Then price started to move up. And this is important here because when we use market maker models, I want you guys to always wait for a low risk buy to print first and then start looking for opportunities, because once that low risk buy forms in a market maker buy model, you have confirmation after it starts to expand that we're going into the first stage distribution, which confirms you're going into buy side of the curve. So when you have confirmation you're going in one side of the curve, you will have a very a much higher chance of getting a winning trade if you're looking for buys, while order flow was previously still bearish. So basically what I did last week, and I will switch to the Discord screenshots as well, of course. Let me just quickly do that right now. See if I can do it like this. Yeah, there we go. Right, so this was the end of the there was the start of the month after the monthly closure, and if I zoom in on this chart, right, it looks like a continuation purge on the daily time frame for lower, which in turn means DXY higher, right? Now, I've been scouting and waiting to sell Euro USD for the past 2 weeks, and this week we got 2 wins and a win from last week, but I will break that down in a bit. And you can see this in the screenshots as well, right? I'm waiting for SMT to form on certain areas. This order flow was bearish, right? So if we get SMT, run a short-term high and then break structure lower. And important here is a confirmation entry, which I outline here. Let me see. Waiting for a failure of a bullish array. This is important because even though it's bearish, it was kind of choppy still, and I was very reluctant. So I needed an extra confirmation. So that's done by waiting for a bullish array to fail during the day after you get SMT. So the failure of a bullish array will confirm that your SMT will hold, right? So now you have confirmation on high of the day. You can actually see that here. So once the fair value gap gets inverse, we should set high of the day. This fair value gap would be the confirmation to go short, right? Now, this never happened, right? Because look at the next screenshot. We dipped below it, but we still closed above it. I explained it here as well. No IVG. There's not the CSD as well, right? So there's not a price signature. Very slow day, and in the end, price just failed to inverse the gap, so there was no trade setup. This is how you avoid losses, because if you go in too early, you will just get stopped out. Now let's go to the next day. We actually had that massive gap here on Wednesday the 6th. I was like, okay, we're going to be sidelined. We're not going to touch this. There's no reason to go in already. Then let me just quickly switch back here. We have this piece of price action. This was a drop, right? With the where we skipped it. And then the next daily candle, we had this nice consolidation. And let me go back to the DXY chart. There we go. That's this one, right? This is beautiful because now you can wait for an order pairing low to get taken out into a key level and wait for that low risk buy to print. That would give you confirmation that you're actually going into buy side of the curve, right? So what I did, I waited for a bullish OB to form, right? That's this one, because this one candle took out the liquidity. And once we close above, I'm just gonna go in, right, when price retraces back into the the gap here, and then I'm gonna sell Euro USD. That's exactly what I did. Post a screenshot in a bit as well for all the entries I took. And then we started to chop. This is very frustrating because you're in a proper trade in your favorite direction, but it just is reluctant to move. It's very it's gonna set apart the traders who are actually patient and want to hold their trade, or those who are impatient and just start to fire away. Oh, now I'm gonna look at sells. Oh, now I'm gonna look at buys again. Oh, it looks like it's bearish. Now I'm gonna look for sells again. Don't do that, right? You need to really have patience. And this entry I held as well, and I put my stop on this low specifically because there was no SMT yet on this low. So for me, this low was still kind of weak-ish. Even though I used this OB as an entry, I was not trusting this low. And we can see this low did not get taken out, but it did get taken out on Euro USD. So that's a good thing I did, was take a stop loss on Euro USD, which was on this high, because it would have taken out these highs here, right? So that's actually something you can use as well if you are uncertain a certain low will hold. But yeah, the rest of the week just chopped. Then this is very telling. Monday, we start with a little gap here. And the important part here, when you use market maker models, is you want to see an opposing array form in a violated area of price action, right? So this is a area where price should go bearish from. And why should we go bearish from here? Because we run a short-term high, right, into a key level. And prior, this high already get ran. So this range here should just hold for lower if we are bearish, right? Now, I was bullish on this, obviously. So what you wait for is a bearish array to get violated, which is this one here. Then an opposing array to form, which is 2 down close candles. And now you have an actual trading range to work with. So if you have that trading range, now you can start looking for an entry. And you can look for example, what I always want to look for is a time frame alignment model entry, right? So you run short-term lows into a key level. And in this occasion here, we had a 4-hour fair value gap, right? This one. So that's the key level. Then we have 1-hour lows down here, my bad. The 1-hour lows here. So if you run those lows into the key level, you can literally just buy below the lows. That's a turtle soup entry. That's the basis of my model, right? If you miss it, you need to use a confirmation entry. And that's what I did this week as well. So let me just show you some screenshots, right? So you know what I'm looking at. Let's just scroll ahead here. Yeah, this was the entry from what I said, right? The OB that formed, and we just had to hold it for a long period of time. And then the next week, right, I still have the same thesis as the last week, and today's closure will confirm. And that's actually the closure I waited for, right? I just showed you that on the chart where you have an opposing array here, right? That opposing array got formed, and we're waiting for this daily candle to close. And now we have confirmation. We're actually going to run higher. So this was my initial thing. This is what I just explained, right? The time frame alignment model entry. You run these lows into a key level, and then you go higher. Now, we did not do that, right? So now we're waiting for an IFG to form, and this is what confirms low of the day for us. We need to have, very important, we need to have SMT on the low, right? To confirm that IFG will hold, because if there's no SMT on the low, it is a weaker low, and we want to have that cracking correlation, right? Now, and look at that move as well, right? Just straight up, I just bought when we retraced back into the mitigation area here, and I held that position for the next daily candle. Let me see. And yeah, over here, for example, I was waiting for the consolidation and see what price does. And we formed this CSD and I literally told everybody low of the day should be set here and we should see a higher price from the OB, right? You can see very choppy London. This is because there was a bank holiday for the European banks, right? So it's expected that London is going to be a lot slower, and the New York session should be a nice expansion. Over here, we got a CSD OB, right? And this is a good OB because we run the low, right? And then we continue up higher. And then, yeah, you see the result, right? It's flying, and I tell everybody, just take a partial. This is the screenshot, by the way, from my entries. This is what, all the way to the left, that's the one from the week prior, right? Because that took a long time to develop. Then, unfortunately, that one trade got taken out from the day prior. And this is the CSD OB entry, which I just showed you, right? And then a partial here at around 2-ish R. And then in the end, yeah, we'll just go to the chart. Obviously, weekly target was hit and it went even way further. We'll go to the chart on DXY. We'll show you here, right? Or Euro USD, let's do that, right? This is the CSDOB. There we go. And then it ran lower and I went all the way down into the target, right? This is the daily fair value gap. And this is just, I think this is just very beautiful price action for the last 2 weeks, or for the last week, this week's price action rather. I think next week is going to be good as well. Again, you guys need to comment down below. What do you think the next weekly candle will do? We'll touch back again next Sunday. This time I will be there. What are you going to be looking for next week? Are we going to look for sells? Are you going to look for a reversal play? Do you think price will hold this fair value gap, or are you just waiting for a retracement and then sell again? Let me know in the comments. Hopefully this entire breakdown was useful. There's a lot of information here where you can use to find a proper entry model as well. If you did, of course, hit the like button, subscribe, and we'll catch you next week.